Hey, everybody, Chuck Barone on Wednesday, July the 31st, 2024. Let's say goodbye to July. Bye bye, July. Now, we're already ripping through this year so fast. I can't believe how, I guess the older you get, time just, it just goes by so fast, guys. And while you're young, I don't know how many of you guys on here consider yourself young, but while you're young, enjoy those slow days because I promise they're going to speed up. It's crazy. Can you believe football tomorrow night, Hall of Fame game? Got to say, I'm not unhappy about that. Anyway, I get babbling. Forgive me. Before I get started, let me take a half a second. As always, welcome everybody to the show. Nice to see all my friends on the chat going as always. You guys rule, man. It's nice to see getting to be quite a community on the chat now prior to the show. It's really interesting. Happy to see that getting started up. Very happy. Okay, let's talk about crazy today. So we all know Federal Open Market Committee meeting today comes out. They decided to keep rates. Not they didn't move rates today, but oh my, did things move quickly once Powell started talking at his presser. And we'll talk about some of the details of that. But basically, Powell paved the way for rate cuts starting in September. And really, even had some comments about the politics of it. I still got to see how it's all going to play out. Trump is a guy that freaks out pretty easily, and I got a feeling he's not going to like this. He's actually already spoken about not liking it, so it's going to be interesting to see how he reacts to that, how Powell reacts to how he reacts, and on and on. But the markets today jumping for joy, man. Yay, we're going to have rate cuts. The panacea is here. We're going to have the economy, which is moving okay, according to at least the numbers we get. The economy is doing okay. Most people are doing okay unless you're in the mortgage business in Las Vegas. And, things chugging along, jobs and basic consumers still spending, even though the cost of borrowing is higher. So the stock market now getting really giddy, and you're probably going to see a pretty good rally here for a short time. The stock market jumps like crazy today. The Dow up 99 points, 40,842 on the Dow. Nice fat number there. The NASDAQ really jumps because not only do you get the benefit of Powell, NVIDIA comes out with news today. That stock goes crazy. The NASDAQ up 451 points today, 17,599. And the S&P, the broadest index, up 85 points today, 5522. 85 is a big move on the S&P, guys. 55.22. So the stock market rejoicing. Yay, we're getting rate cuts. Same with the bond market. Look at these bond market numbers. Everything, bond buyers buying bonds today. Because what happens is the way bonds work, right? It's all about the yield and the maturity, right? So what happens is you have a bond that's today, say 4.5, 5-year bond. When Powell starts to cut rates, okay, now rates are that very same bond is 4.25 interest rate. That bond has to give up principal to reach a 4.5% APY, annual percentage yield. So they got to give up part of their principal to increase the yield to keep it. So what typically happens is they're not going to do that. They're going to keep those at par, but the bonds that yield higher get a bump in price. So that's actually how you can make capital gains in bonds, is when you move into a rate cutting cycle like we're moving into now, that Powell has pretty much said is going to start happening. And, now your bonds go up in value because your yields are higher than the prevailing yield available on the market today. So anyway, bonds getting a bid. The 10-year falls just 4 basis points, but now sitting at 4.11%. A pretty low number on a 10-year bond, guys, right? The 2-year drops 10 basis points. Boom, shorter term, because that's what the Fed really has the power to control. The 2-year now at 4.25%. So now you got this inversion down to 14 basis points. I was reading one analyst today who thinks that the 2-year will get into the threes once it gets out of this inversion and goes back to normal looking yield curve. He's seeing the 2-year under 4%. Interesting. The dollar today, down 42 basis points. You know that when they cut rates, lower rates, not good for the dollar, higher rates strengthening. So the dollar minus 42 basis points out of that comfort zone it's been in. Still above 104 at 104.04. So hanging on by a thread at 104. It's going to be interesting the rest of this week because we're going to get data that's going to either support Powell cutting or maybe be a check mark against a cut. The markets are going to be wild. It's going to be fun to watch. With the dollar tanking, precious metals, nice day today for precious metals. Gold jumps $36.80. Nice day for gold. $2,448.20 for an ounce of gold. Good solid number there. Silver up 59 cents per ounce. $29.04. Come on, silver, man. We need to make a run at $30, guys. We need to get silver at and above 30 and hold it there. That's our target. That's what we're looking for. Oil today also gets a pretty good bid. Oil jumps $3.48 for a barrel of West Texas Intermediate. Now sitting at $77.91. I don't think this is going to be like a turning of the tide as far as oil pricing. I think this is just a trading move, end of the month, options, everything expiring. I think you're going to see oil, as we've been saying it forever and ever, 70 to 75. Bitcoin today, not a good day for Bitcoin, down $1,386. Still a decent number, 64,753. It looks like Bitcoin from a technical point, okay? I don't really have a lot of the fundamental stuff and a lot of data on Bitcoin, but from a technical point, it looks like Bitcoin is more trending down than up. We're probably going to get trending down towards 60,000. I'd have to get to the charting to see exactly where the support is, but my guess is probably around 60,000 somewhere before it can bounce. And let's get it back up and take another run at 70,000. All right, so let's talk about news today. We all know it was Powell, and nothing but Powell today. A lot of the actual data got kind of shoved to the side. I'll be reading for that after the show today, because that's when it'll kind of come out. Prior to market closing, it was all about Powell. So Powell basically paving the way for interest rate cuts surprisingly starting in September. So they're calling it already the Powell pivot. Ooh, the Powell pivot, pivoting from higher rates to lower rates. Powell had some interesting quotes today. He said, "We think that the time is approaching. We think that the time for rate cuts is approaching." Market's just going, oh my God. He said, if we do get the data that we hope we get, then a reduction in our policy rate could be on the table at our September meeting. Market taking that to mean, unless there's something really funky in the data coming that shows, okay, we got a little bit of a problem, the economy might still be a little too hot, or we might have some pressures here on prices. You get a spike in CPI or something like that, but basically paving the way for rate cuts starting. Talking about the consensus. This is really interesting stuff. Talking about a rate, 2 cuts this year. So that would get us to 4.5-ish or 4 3/4-ish. They're talking about roughly 4% by the end of the year in 2025 and 3% year 2026. Powell, I guess, talking about he's feeling comfortable around 3 to 3.5 for his neutral rate. Powell went on to talk about the political aspect of this, not in much detail, but the fact that he mentioned it at all tells us what he's thinking. Powell said, "We don't want to be involved in politics in any way," quote unquote. So basically what he's trying to let the political world know, the moves that the Fed is going to make, as far as holding rates, cutting rates, whatever they're going to do, is not about politics. It's about what's best for the economy, what's best for the Fed's mandate, right? Very, very touchy subject here. Like I said, traditionally, the Fed is not a big fan of cutting rates during an election. There's only a few months, during the year that are really prime time election, right? You got, basically it really ramps up in September and October. The election happens, was it the second Tuesday after the whatever, first Tuesday after the first Monday or whatever it is. So, there's only a short window where they typically don't cut rates, but Powell moving forward, looking like September is the day. Now we got Fitch and of course, remember I told you guys, as soon as they get the idea that rate cuts are coming, here's what we're going to get, how fast and how much, right? Okay, how much are they going to cut rates from where we are now? What pace are they going to have? And what's the bottom line number they're looking to get to? They kind of telegraphed 5.5 on the way up. They're kind of telegraphing 3% now on the way down as their bottom line number. But Fitch coming out with their forecast, 1 rate cut in September, 1 rate cut in December. And I guess that's kind of the consensus on Wall Street now. 100% certainty on pricing of a Fed rate cut in September. Amazing. So what do you guys think? Is just this idea of a rate cut enough to really get a big stock market rally going? If you look at today's stock market rally, you would think the answer to that is yes, right? Here's what I would play it. Stocks will probably continue to rise, albeit with your ups and downs, right? Stocks over the course between now and the September date the Fed actually announced a rate cut, stocks will probably rise. As soon as the Fed actually announces the cut, that's the date, but it'll all change back, and now the stocks will start to fall. That's just my guess, because that's typically the way it works. What do they say, right? Buy the rumor, sell the news. That's kind of where we're at right now. Data coming this week now takes on an extra heavy feel to it, because now all the data is going to be looked at in a more serious way of how will this affect a rate cut in September, right? So we'll get jobless claims tomorrow. We'll get the jobs report on Friday. We'll get consumer data, manufacturing data, all kind of stuff coming over the next couple of days. They're going to really be scrutinizing that data with only one thing in their mind. Will this affect rate cuts in September? And the market will react accordingly. It's going to be crazy, crazy, crazy times coming up, guys. Powell himself said he sees the neutral rate at 3 to 3.5%. So now the markets, like I said, they're looking at it like this. 2 rate cuts this year, so trim off 50 basis points, that gets us to about 4.85%. Now they're talking basically a quarter point cut every 3 months per quarter over the next couple of years. So they're talking about a bottom rate of 4.1% at the end of next year, which would only give them 3 cuts. It might be a little lower than that, the way they're calculating it, or maybe December. I don't know if they're going by fiscal years or whatever. But the bottom line is the Fed figuring 3.1% at the end of 2026. So we'll see. I think that, that would certainly be stimulative to the economy. You'd have mortgage rates 4.5-ish, 5-ish. That would be good and look a way, way more attractive to borrowers than the current 6.5, 7-ish rates are looking, right? So we got a lot to look forward to over the next, couple of months toward the end of summer and into the fall. We're going to have the election going full blast, and we already know what kind of nuttiness we're going to get on that from both sides, Matt. It is going to be fascinating. Both sides cranking up their PR stuff. They're doing their opposition research and beating the shit out of each other. It's fun to watch it already, and they're just getting started. So we got the election. Now you mix the Fed into that. What's happening with the economy? Because it seems like this is where the Fed really going to have to take care of business, because if things slow down, the economy slows down, you don't want to be pumping the brakes too hard and make the economy stop and you got a recession on your hands. So the Fed really going to have to finesse this to keep the economy going keep us out of a recession, at the same time, not igniting or reigniting inflation again. Fascinating, fascinating stuff. All right, last thing before I run. Tell me, guys, how much higher is your power bill this year than it was last year at this time? They're talking about they're not, even though everybody knows they're continually raising the rate for your power bill in Nevada. It's friggin' crazy. But they're saying that because the climate's getting warmer, people using their people, especially like in a place like Vegas where you have to have air conditioning is running a lot longer because now you got to cool it from, say a 105 down to your temperature, say 75 or whatever it is. Now you got to cool it from 115 down to your desired temperature, and it's machines having to work a lot longer, sucking up power. Everybody's power bills going to the friggin' moon, guys. Listen to this. The average across the entire United States. Now remember, there's a lot of states that don't have air conditioners, even though they're now starting to put air conditioners in places they didn't used to have them, like Washington State, New England, and other places. All air conditioners going in everywhere because everything's getting warm. And now they're talking about this new phenomenon where not only the temperature is breaking records, but coupled with that, you're getting 100% humidity. These are deadly, deadly, deadly heat waves now. Well, you get 100% humidity with 105, 110 degrees. Well, anybody that's ever been to South Florida gets a little bit of an idea of what that's like. So power bills going crazy. Listen to this, bro. 28% of the households they surveyed have said they either had to give up buying some food or medicine to pay the higher power bills. I know here in Nevada, ours is up around 20% or so, I would guess. Never ending, just the necessaries, the stuff you got to have. Food, you got to have power. You got to have power in your house. Up, 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 up. They're making it so hard for regular people to live and just have an ordinary life. Just to pay your friggin' power bill now, people are having to give up food or medicines. Well, I can't get the, whatever medicine I need, or I gotta, instead of buying a 3-month supply, I can only buy a 1-month supply, even though it means I pay more for that 1 month than I would if I averaged 1 month over the 3-month. You know what I mean? Anyway, guys, crazy times. Crazy, crazy ass times. We're living history. So make sure to take a second and to smell the roses every once in a while, because they're going to write books about this era for sure. And we all get the privilege of living through it. Anyway, guys, that's it for the day. As always, appreciate your support. It means the world to us over here. It keeps this show going every day. Please, guys, hit that thumbs up, hit the like button. It really changes the algorithms around. It gets our video out there in front of a few more people, gets us a few extra views. Our views are down, guys. We need to get the word out. Talk to your friends. Tell them to watch the video. Pass it, forward it to people. But please make sure to hit the thumbs up. It really helps us out. I'll be back tomorrow. Tomorrow's jobless claims and a ton of data. We'll see how the market digests all of this Powell stuff over the course of overnight and into tomorrow. We'll be back here to bring you the news you need, guys. Until then, everybody, take care. Thanks.